So that's the change. 24,330, 150 odd points higher once again, exactly in line with what the GIFT Nifty was indicating earlier today. The Nifty 50 pack and how that's opening up. So do we see a lot of IT names? Yes, we do. There is HCL Tech, Infosys, TCS, Wipro, all starting on the positive side. There's Hindalco, which is coming up, Bajaj Finserv, which is coming up, and Tata Steel, which is coming up as well. So there are a few, at least Tata Steel, which is a metal name, and of course Hindalco as well, which is a metal name, which is coming up. Bajaj Finserv and Bajaj Finance, perhaps also the quarterly numbers. Tata Motors, passenger vehicle, Adani Enterprises, Mahindra and Mahindra are some of the losers, but they're far and few. It's largely 40-plus names which are starting in the positive zone this morning. PB Fintech, of course, that block going through, and it's down about 6% It's a large 2.5% block which has changed hands. Rima.
Well, it's a solid start to Friday. The Nifty is up 0.6% today, 150 points above 24,300. Now the weekly gain for the Nifty and the mid-cap index stands at nearly 1%. On the gaining side, as we pointed out, it's all IT. So IT continues with the rebound from yesterday with HCL Tech, Infosys, TCS. HCL Tech, the one that won a very large $1.1 billion 5-year deal, net new. That's a stock which is racing away with a 4.5% gain. But the other IT names also up nearly 2%. So large cap and mid cap IT participating. The other pocket of strength is the other metal names. The Nifty Metal Index will also come up for your screen. As we highlighted, we have seen an easing in the dollar index price, now below 101. So that's providing some sentiment uplift to the metal names. And commodity prices overnight too, as Manisha was pointing out, are slightly higher. Consumption, that's been a pocket of strength this week. So you've got names like a Nestle. Eternal is up nearly 1%. That's rallied 10.5% so far this week. You've got Nestle 4% up this week. HUL has moved up 2.5%. So consumption names are higher. Avenues, supermarts will come up for you on your screen. Little disappointing quarterly updates, and that stock has taken a knock of nearly 4%. While on the flip side, Dabur numbers are good, but the stock is only up, is on the flatter side. Bajaj Finance, Finserv will come up for you on your screen. Banks are lagging today. Well, the Nifty Bank is not participating at all. It's flat on the Nifty Banking Index. SBI is a bit of a problem. Axis Bank has no gain. HDFC Bank and ICICI Bank will also come up for you on your screen. HDFC Bank is up half. ICICI Bank also up 0.5%. But on the whole, the banking index is on the flatter side. Adani Enterprises under pressure on the back of the QIP. And even a couple of these auto names, which had a good run earlier this week, are cooling off a bit. So Tata Motors, passenger vehicles, M&M in the red now.
But the stock of the moment right now has to be PB Fintech. The large trades happening, the stock down about 6.5%, serious volumes out there. We do understand that Temasek is the seller. Trade has happened, our team has flashed that, and the stock, where it goes from here will be extremely crucial to track. Avenue Supermarts continues to see some selling, down about 4% post their numbers. But if you look at the broader end of the markets, a lot of stocks that saw a big surge yesterday are continuing to start fairly well this morning. EKO Lighting is one of them, has a serious volume backing that stock right now. IFGL Refractories as well. The stock is up 18% this week. Daily volumes crossed in the first few minutes itself. And Waterways Leisure, this was the Cordelia Cruises, opened week, day before yesterday when it listed. Yesterday was up around 10%, and this morning itself, Waterways Leisure is up 8%. So it's across the board, decent gains coming by for the small cap index. And a couple of these other consumer names which are doing extremely well too. AWL Agribusiness, which is basically the erstwhile Adani Wilmar, which is up around 4.5%. We are seeing some traction in names like Emami as well, which is up 3%. It's the rub off of Marico's update that has come by on the entire consumer space, though Marico is seeing some profit booking after a decent performance because the stock has been an outperformer itself. Kalyan Jewelers is the other one, which is opened about 0.75% higher. The street is expecting good updates coming in from the jewelry pack too. But if you look at the large caps, once again, it is HCL Tech, which is the top Nifty gainer. IT continues to do well. The Nifty Bank, so long as it holds the 200-day moving average of 57,200, no real problems out there if the IT index continues to take it forward.
I think I just want to highlight, just a quick 2, 3, 4 names. Hitachi, let's just put this up and let's have them at the bottom of the screen as well. in terms of the changes which are coming through. Hitachi is down 7%. I mean, actually, the big cuts are coming through in these transformer companies. There is Hitachi down sharply. There is GE Vernova, which is down sharply. And I think there is CG Power, which is down pretty sharply as well. GE is down about 9%. These are very large cuts. CG is down about 6% odd. And let's put the news out, we'll have more on this one. The news simply is that the government of India has given a 2-year extension to Chinese transformer companies to be able to sell to Indian state, to the government. Power Grid and others, I mean, state discoms, etc., will be able to buy transformers from 4 Chinese companies which have got manufacturing presence in India. But these companies are very, very large. They're some of the largest transformer companies out of China. So the fear is increased competition and, of course, pressure on margins as well. So that is the news. Now, let's bring in Vinny, who's got more details on this one. Vinny, take it away.
Hi. So, as per the latest update, there are these 4 Chinese companies that have gotten this exemption. TBEA Energy and other 3 more companies like Takia Electric, all of them have gotten an exemption. Now, obviously, do not forget in Feb 2026 earlier, the approval is only for TBEA for reactor category for 1 year. In this also, there's a condition that comes in that locally made in content should be minimum 50% for this as well. So, there is an impact that comes in for these transformer companies. We also have a note that's coming from IIFL on this front as well. They said that the move was not expected, and especially now that the domestic pricing, this becomes a concern. They see the speaking out, increase in terms of Chinese competition that comes in for all of these players as well, the transformer players, and obviously more competition comes in, means in terms of a pricing concern that comes in here as well. And that is why all these stocks are seeing a negative downtick today in the trading session. Any of the names on the transformer front are seeing a sharp downtick. Siemens Energy, GE Vernova, T&D Transformers and Rectifiers, World Tamp, all of them are down in trade.
Thank you very much for that. And just to put it in context, this correction that we're seeing in the stock price comes on the back of a very large up move. Just 3 years back, a GE Vernova was in the 200 rupee range. Now that stock price, it'll come up for you on your screen. I think it's closer to 4,500 after the correction, 4,400 on GE Vernova. A 3-year chart from 200 rupees to 4,400 after the correction. Hitachi Energy was closer to 4,500, and now it's closer to, I think, 31,000 post the correction. They've been multi-baggers, and now on the back of the possibility of increased competition, we are seeing a correction. In fact, we've got the perfect guest now joining in, Shreyas Devalkar, Head of Equity Axis Mutual Fund. Shreyas, I can see in the Axis Midcap Growth Fund, you have an investment in many of these T&D companies, and you're playing the entire capex cycle, and not just GE Vernova, Hitachi, Apar, Cummins, all of them. Do you want to weigh in on this particular news? And there are also concerns of the valuations. So can you make the case for fresh investments in these companies at this price?
Thank you very much for inviting on the show, and good morning to everyone. As far as the power or even overall cat food space, as you have highlighted, there is a structural growth story in this. But in the earlier session, you were also highlighting that yes, this stocks has been multi-bagger and the valuations are very high. So any such news definitely bears some pressure on these stocks. In my judgment, if you see the demand supply of transformer is trouble not only in India, worldwide. Some of our companies in India actually got orders from US despite a tariff, right? So this space is really tight in terms of demand and supply. Having said that, because of high valuations, definitely any news which may be construed as negative, the stocks may react. As far as our positioning in most of the funds is concerned, we are positive on entire capital goods space, especially the mid and small cap oriented funds. And when I say capital goods, it is more to do about manufacturing. So it is whether it is auto ancillary. They are also having a lot of manufacturing through non-auto businesses. So some of them are in EMS space, some of them are in defense and so on. And likewise in capital goods, obviously the lot of exposure is there in the power, and obvious reasons are everyone knows it is about renewable, it is about increasing power demand worldwide and in India as well. So that long-term story continues, but because of the valuation, there may be corrections.
Fair enough. But if I can see in your portfolio, particularly in this mid-cap growth fund, you increased your holding in these companies just in the prior month. You were anyway holding on, but you added on. So you are comfortable with the current valuations to add to the current positions. I get the correction bit, but at this juncture, you're comfortable adding.
We generally take a view based on the merit of that particular segment. Probably post the Iran war during February, March, that kind of time period, we had a view that the market may reward more of the manufacturing segment because of the global disruptions which are there in the supply chains, and accordingly across manufacturing. Especially in again mid and small cap oriented schemes, you must have seen increase in the manufacturing space and not a particular segment.
Right. Shreyas, I remember very clearly the last time we spoke, you had started to get constructive on the staple space. You said relative underperformance, low base, and increasing improved outlook should help your cause. The last 1 month, these stocks have done extremely well. The updates are now coming in, the likes of Marico, etc., growing fairly well as well. Would you continue to hold on to your bullish call on the staple space?
It's more to do with the consumption space, not only staples, and especially the changes what you're seeing since June. So two big changes, in my opinion, which were pro shift towards the consumption part of the economy. Because manufacturing, for multiple reasons, repeatedly got re-rated because the consumption space was failing to deliver. And when I say consumption, it includes the financial services as well, because part of financial services growth is retail credit growth driven. So in this entire space, there was a disappointment for a long period of time now. Almost 2 years to 3 years or so. While currently there are positives, are a couple of them. One is nominal GDP growth improving. Whenever nominal GDP growth improves, the headline numbers start improving, and that gets reflected in the quarterly previews what are getting released now, that you may observe that. Even the retail credit growth, what we are witnessing upwards of 15%, is partly because of that, partly because of from bond market to banks, etc. But partly it is because of that. So this trend, which is helped by nominal GDP growth, is in favor. However, we as an investor are also looking at the margin impact, because there are some segments or certain segments of this consumer space where the price increase is not sufficient to counter the price, the raw material price increase. So that is one. And one view we are also taking that it is also we have to look at 2-3 quarters ahead, because already these commodities have started falling and you are sitting on a price increase. So how much impact it will have on the margins 2 quarters down the line. So this quarter margin may be washed out for someone because of the raw material impact. So this holistic picture we are taking, and when you are talking about FMCG, I'm just broadening this conversation to entire consumption basket, including retail credit growth driven banks and NBFC, including the FMCG, autos, and many of the consumption segment of market. So one, as I said, is nominal GDP growth, and the second is the coordinated efforts of both central bank and central government to bring in the FII flows, especially in the bond market. So these were the two main triggers for this.
Shreyas, across the board, you're heavily invested in financials. You have an exposure to mid-cap banks like Federal, large-cap banks like ICICI, and across the board, even in NBFCs. Is this the time to double down on financials? Would you look to further increase your weight because credit growth is picking up, FCNRB deposits coming in is a positive, or are you comfortable holding on with your current weightage?
Already, as you have seen, that we have increased, and it is not now, we have been increasing since last 6 months in this space. So both these as well as part of consumption-oriented stock, because they have underperformed a lot over last 2-3 years. Absolute valuation of some of the consumption-oriented stocks, apart from banking, may not be as attractive, but there is a case for them also to deliver, because repeatedly market has shifted to manufacturing because there is a delivery, while this part is getting ignored. So that's where you would have noticed that in this calendar year, there has been shift across the portfolios. Though you might have observed we are adding some of the manufacturing stock, but more shift in the portfolios has been towards the consumption oriented, because manufacturing we have added in 22, 24 as well as 25.
So if you have to rank the themes, consumption at this point, consumption right on top, then would be manufacturing and then banks, or rank it for us?
As far as large cap oriented funds are concerned, that is the case.
Got that. When we were chatting with Sanjeev Prasad of Kosdaq Institutional Equities, he said that India loves a narrative till it doesn't. And he gave the case of railways where everyone was investing heavily 3-4 years back, and now no one's even talking about it. Do you think there is a narrative in the market right now which is not backed by fundamentals?
Good point to raise in this context is what narrative we may talk about, because every narrative works in the market at a valuation, right? So either it is backed by the fundamental or backed by valuation. So generally what we observed is at a particular valuation, the narratives, if it is backed by incremental delta, whether it is sufficient or not, then generally that works. So the case in point is the financial services or lenders, I would call it out. Now lenders got derated for reason, right? So ROE of some of the leading segments of private sector bank actually got compressed from pre-COVID level till now for various reasons. One can get into the reasons, but point is there was a reason why it got derated. There was also a reason why there was a deposit growth slowdown. There was a credit growth slowdown. Now from there, incrementally, if you notice, the credit growth has inched up, right? So there is a positive movement in that. So at this point at this juncture and this valuation, this narrative one may back now, because everything other has to be backed by the fundamentals. So we'll see over next 2-3 quarters how it shapes up, whether numbers are resilient. Because if you see on the consumption space, which we spoke about, even the auto numbers, despite all the troubles the economy have gone through, they are not so weak. So they have weakened from their peak, but then they are not so weak. So that there is a resilience which economy is showing.
Okay. Just one final question then. Again, just referencing one of the interviews that we had yesterday. So S. Narain of ICICI Pru said that mid-caps are most expensive now relative to the large caps. So he sees more value in large caps and small caps right now. Would you concur, differ? If yes, why?
I would go into the segments of those, and that's where I highlighted large cap oriented funds are placed in this manner. Because large cap, if you see the weightages in the large cap indices, they are more towards the bankings, the FMCGs, and the autos, and which are broadly the B2C spaces, right? So in that context, yes, the large cap are cheaper and they are reasonably priced, if not cheaper. So that's where the large cap has advantage. And if the way I highlighted that, if narrative along is backed by the numbers in all these three segments, then there is a case in point to make good money in the large cap. When it comes to mid cap, now in mid cap and small cap, what are the spaces which everyone is playing in that market, not only us? The spaces which are doing good in the mid and small cap are capital goods oriented stocks. They are around auto ancillaries, around multiple themes like hotels and hospitals, etc. They are also a large chunk of the mid cap indices as well as mid cap funds. So all these themes are at valuation where the multiples are not really comfortable. And from that point of view, along with another aspect is if you take 1 year, 2 year, 3 year CAGR returns, again, this is a different better way of looking at the things. If you look at 3 year CAGR of large cap versus mid cap versus small cap, even today, large cap 3 year CAGR is 10-11%, while mid cap and small cap is 20%. If you take a 5 year CAGR, even in that case, it is 11% versus 17%. Though in last 2 years, the returns are not good. And when we say that mid cap and small cap did well, the absolute return there also were not as high. And because of this valuation difference, despite those companies doing good, the absolute return at the category level or at the index level, that has not been very high. So the valuation remain high. So in my judgment, the risk reward would remain good in the large cap because of the thesis which I just discussed.
All right, Shreyas, thank you very much for that. Good speaking with you. Appreciate your time here on CNBC TV 18. So that's the perspective as far as markets are concerned. We have the Bajaj Auto management now with us. So there's lots to talk about, right? There's the, where should we start? I think there is the sales numbers for the month of June. There is the electric vehicle policy in Delhi. But of course, there is also the ongoing buyback. I think the buyback, of course, is something which wraps up on the 7th. Rakesh Sharma is with us, Joint Managing Director at Bajaj, who's with us. Rakesh, good morning. Great to have you with us here. Thanks very much for joining us. So let me pick with the number 2 point, which is the Delhi electric vehicle policy. You know, the general consensus was that this has been brought forward, and I mean, you know, the pace at which it has been done perhaps took people by surprise. So just give us your views in the context of Bajaj and what Bajaj, you know, the size of the market which Delhi is for Bajaj, and how you're planning for this transition.
Good morning, Prashant. Well, I wouldn't say that it was a surprise, because the industry was in dialogue with the Delhi government and also the Ministry of Heavy Industries for some time, and a draft had been circulated with opinions asked. So it was not a complete surprise. It's definitely a very bold move, particularly because it is very handsomely supported by subsidy and scrappage incentives, etc., which will be persuasive for the customer. But having said that, you know, Delhi is a very large city with vast distances. And in such a market, that what happens is that there is a lot of different types of use cases. There are personal use cases, there are commercial use cases, as you know, gig workers. Three-wheelers is almost entirely commercial. There are people who have high-frequency travel within limited radius, and there are people who have low-frequency travel across long distances. Commercial people travel 120 odd kilometers, 12 hours to make, you know, the money that they need to make. Now, a singular approach, which is entirely based on only electric, may not serve the purpose of all types of customer segments. And our position has always been that it is very, very important to define the standards of emissions and the environmental burden. But then one must be technology agnostic and actually use the multiple technologies which are available. We are very fortunate in India that we have a very good CNG network which the government has supported. We have got the upcoming ethanol blending, higher blending of ethanol and gasoline, which assuages a lot of the concerns. So balancing, you know, the environment issues, the society or the customers, particularly the bottom half of the pyramid customers' needs, the foreign exchange requirements, energy security, balancing all that requires we feel a multiple approach.
You would have
when it comes.
Yeah.
And,
So one of the, Rakesh, so one of the changes, right, actually surprise, you said it's not a surprise. One of the surprise, I think, which we can clearly say, and many have told us, is that there's no mention of hybrid, which was, and I think, so that's what you're hinting at, that perhaps that would have worked better for all the use cases.
Because see, OEs will adjust to it. You know, a company like ours already has 30% of our domestic revenues are electric. You know, we are at the forefront of the electric development. So I'm not making these comments from a parochial way, but if one has to really balance all these issues out, then we must use the array of options which are available to us and have a solution drawn from that. But banning everything else in preference to just one approach may not serve all the purposes in the longer term, is what we felt. But of course, we are at the forefront of electric. We are now a profitable electric company. I think with 30% share of our domestic revenues, it's probably one of the highest in the automotive industry. We will adjust to it.
125. I mean, so just give us which is your product in that particular segment. But you said, I mean, Bajaj is a large company and lots of focus on EV, and you will adjust and make the necessary changes. Point taken. But you know, the thing is, will other states follow and take Delhi's example in the same way they've taken? We don't know. We don't have answers to it. But how large is Bajaj's exposure to the market, the Delhi market?
Well, I would call it exposure. I would say it's an opportunity, first of all, because as you know that we have not been in scooters, and 40% of two-wheelers, for example, in Delhi are scooters, and this is all new business for us. Three-wheelers, we have 100% market share with a very good network and connection with the users over the years. It stacks up to, Prashant, between 2 to 4% of our all India sales. So that's the thing. But yeah, this kind of a thing, as long as it's, a more holistic approach, obviously should be taken in some other cities also, because almost everyone is suffering from a similar situation like Delhi is. The degrees may be slightly different.
Mr. Sharma, morning. Rima here. Let me get to the June monthly sales numbers and the way ahead. Now, June was overall strong, 28%, but that was driven by an extraordinary 49% surge in exports. Domestic sales were 11%. So going ahead, for domestic sales, considering that the upcoming months are also lean periods, can you sustain a double-digit revenue, monthly run rate on domestic volumes? And exports, can you continue with this blistering pace? Can that 2.5 lakh units push to 3 lakh units?
Yes, actually, we were hampered by supply chain issues, both on the availability side, which is there were interruptions because of the availability of manpower across our vendors and some of our plants as well, and logistics for exports, the shipping opportunities declined. So I would say exports should have been in an ideal situation closer to 300,000 units rather than the 250 odd which we have recorded. So we have got an unprecedented amount of spillovers now continuously because of the combination of supply chain and logistics issues. So these, as I speak, at least the supply chain side is getting resolved, and we are hoping to see a much better July. But yes, concerns remain on the logistics side because the shipping opportunities have become less, and there is obviously now a big buildup at the ports across industries. It's a very, very important issue to manage. But yeah, we are, if you take the spillovers, etc., we are business is pointing towards between 250 to 300,000, which continues this growth rate for at least a couple of months, which we can
and domestic
see.
Okay. So
the domestic business should also continue. July, as you yourself said, is a very, very lean month. August onwards, it starts to pick up a little bit, and of course in September. But it's a very, very busy quarter for us in Q2 because there are many new launches lined up, and I think that will sparkle the business for us. And we are finally hoping that there'll be some unlock in capacity in our electric three-wheelers and the Chetak electric scooters, which also could have done, I would say, about 10% or better, but got sort of restricted because of the supply chain issues.
Right. You said you could have done 10% better. So do you have, as an aside, a target on Chetak? Where does it go by the end of this year on a monthly basis? You're doing about 40,000 with increased capacity here. Do you have a market share target and a monthly run rate?
Well, a lot depends on how the customers respond to the gradual easing off of subsidies. But the trend, as you can see, is very, very positive in favor of electric because gasoline prices have increased, and the maths just supports adoption of electric scooters at a much faster rate. And so we think that will continue. We are taking all measures to progressively double our capacity, which is right now 50,000 units per month. We are looking over a period of time to double this capacity because we think that this segment is set to grow very fast.
Right.
Do you see margins ticking up in Q2 because crude prices are back to what they were, commodity prices have eased, exports are doing very well, you have already taken price hikes. Q2 margins should be better?
Well, the margin story is actually a mixed one because you're right, there was some inflation to a combination of Forex cover at price increases, about 1.5–2% price increase, which we took last quarter. We were able to mitigate that. But going forward, there is a lot of cost side inflation in things like aluminum and electronics, as well as polymers. The markets don't respond so quickly to the ups and downs of the oil prices, but there is also the manufacturing side issues in West Asia, because it's creating a demand and supply situation. There is this whole suck up which is taking place on the AI side, which is driving up the cost of electronics. And we are looking, our outlook is that there is going to be strong inflation this quarter. We've already taken mitigating actions. We have sort of covered up at least 50% of the inflation, so we have to see how it progresses. But on the support side to the margins, yes, you're right that exports is a very, very strong story, which is continuing to unfold for us, though the exchange rate has now stabilized. And the premium end of our businesses are doing well.
What could the net basis point sort of impact be on your margins over the next couple of quarters, if we had to get down to that?
See, it is not that we drive to a certain precise number, as I've been saying at your show, that ultimately when we have to see how the chips fall down, because it's a story of the mix. Now, individually, we are seeing, progression in our margins, improvement in our margins, which might get a little bit thwarted because of the inflation, which I just talked about. Right. We have to see how the inflation unfolds. But ultimately, it depends on how fast the electric business grows, which is less than the corporate profitability. We have to see how much of the exports opportunity we can supply, unlocking supply chain, which is above the corporate profitability. And when we put all this together, then we will get a margin view.
Yeah. Rakesh, I don't know how you will respond to this one as a stock market question. The buyback is on, promoters are not participating. It's a signal that the promoters believe the intrinsic value is above 12,000?
Well, you'll have to ask the promoters that question. And yes, once the whole buyback is closed, we will certainly put out a detailed note on how it has gone.
Yeah. Fair enough. I mean, will we see a more? Will you put out like a policy as well, like a more structured policy on buybacks? I mean, capital allocation framework in that sense, Rakesh, or will this be opportunistic?
No. We've already got a policy which is there, and it is in practice, and that policy says 90% of our, given a certain level of cash reserves, 90% of our profits are distributed through a combination of dividend and buyback. So it's pretty spelled out pretty much in detail. And it's been in practice, I think, for over the last couple of years. So no change in that. Yeah.
No, I'm just, fair enough, got that. You're the promoters not participating, which means you're leaving a fair bit on the table in that sense, which is, I guess, a sign of confidence. I guess should be read as a sign of confidence for investors. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC TV 18. We'll take a quick commercial break here. Well, we'll stick with autos and two-wheelers and four-wheelers and that space basically. And the discussion has been for the last couple of days around Delhi's EV policy. And this time we focus on the infrastructure which is needed to make all this possible, the charging station expansion. So we've got two gentlemen joining us on the other side. We've got Virendra Goyal from Tata Power and Chaitanya Kanuri of WRI India. Stay tuned. Welcome back. 160 points on the Nifty is what we have, 24,333. Chaitanya Kanuri is Director, Electric Mobility and Batteries at WRI India. Virendra Goyal is Head of EV Charging at Tata Power. Thank you very much, both of you, for joining us. We had the Bajaj management with us. I trust you caught some of that conversation. We started, of course, with the EV policy and, of course, where Bajaj sits in the middle of all of it. But the infrastructure, the charging infrastructure, right? So let's get down to brass tacks in that sense. Virendra, how many charging stations do we have in Delhi?
So in Delhi, Tata Power has roughly about 900 charging points. We support large, bus depots, plus there are public charging stations deployed in various public locations like hotels, malls, residential societies. And there are always charging stations in pipeline. So roughly about 50-60 new charging stations are in different stages of completion. And it is an ongoing activity. New charging stations continuously keep getting added up.
How many do you add? How many do you add a month?
See, it depends. There is also to do with seasonality, but on an average, we add about 500 to 600 new charging points, new chargers rather, every year. It also, it is also to do with the demand. Like for the last 3 months, all of us are seeing there is a surge in the electric vehicle EV sales. If you look at the car sales, has got doubled up, which will naturally give a push for higher charging infrastructure deployment.
Yeah.
But on an average, we deploy about 500 to 600 in a year.
Yeah, got that. And and this maybe this question is more appropriate for Chaitanya, but in your opinion, how many charge? What's the total size? Tata Power is 900, and you add 500 to 600 every year. What's the total charging infrastructure in Delhi, if you have that number?
I may not have readily, but I'll tell you, there are various segments on which charging infrastructure is calculated. We have deployed about 12,000 home chargers in Delhi. So, which are like a private charger to every EV owner. So, all put together, Delhi should have about 25,000-30,000 charging points. Tata Power would have about 15,000 of them.
Yeah. Okay. So, you would have about 15,000 in total. So, you're saying 12,000?
Including the home charging, we would roughly have about 15,000 charging points.
I see. Got that. And you're saying 25 to 30,000 in total in Delhi? Should be.
In Delhi, it should be there. Yeah, yeah, easily.
Okay. And this includes both public and private, everything, all industry, everybody.
Public, private, everything, buses.
Yeah, got it. Chaitanya, come in on the conversation. If you want to add to these numbers and just the scope of it.
Sure. So I think in terms of public charging itself, again, the data is really all over the place a little bit because there's no centralized way of collecting the data beyond voluntary sort of inputs from charge point operators as well as the discoms that are setting up charging. Public charging, I think as per the latest figures, is around 2,000 charging stations. But again, a lot of the stock would be private because two-wheelers, four-wheelers, all of these do charge in their homes and in workplaces as well.
What is the requirement? Now, that is the more critical. If you've done any mapping, if this policy is to roll out, what is the requirement, Chaitanya, in your opinion?
So, in India, currently, I think various studies show that we have about one charge point for 135 or 200 up to 200 EVs. So anywhere between one public charge point for 100 to 200 EVs is the current figures as per various studies. If we look at global best practices, we have again a wide variation between countries. You have China, which has around one charger for every 10 EVs. You have the US, which is one charger for every 33 EVs. One of the best figures in the world is the Netherlands, which has one charger for every 5 EVs. But then those are slow chargers. So it also depends on the type of chargers you're deploying. There is no one optimal ratio, but globally, excuse me, globally, it is agreed that I think anywhere between one charger for 10 to 20 EVs is considered ideal. But again, this depends on whether they're fast chargers, slow chargers, and how much of the share is home charging.
But our ratio is, you said 1 to 100 or 1 to 200, or we don't know?
It's between 100 to 200 right now, depending on various figures and various studies.
Okay.
So it's a bit of a variation.
Right. So I mean, it's a long way to go, right?
We do have a way to go. In terms of numbers, yes, but I think more importantly also in terms of siting, especially when it comes to public charging, where are you siting your public charging so that it is allowing access to the maximum number of EVs, as well as ensuring that these charging stations are operational. Because the first generation of charging stations, many of them are not as operational today, may not be as reliable for EV users, which feeds into that sort of charging anxiety or range anxiety.
If you're in touch with the government in Delhi, Chaitanya, what is the plan by the time this rolls out, right? What is the plan? What is the government thinking? What will this number go to? From 25 to 30,000, as Virendra said. By the time we hit rollout, what do you think that number will be from government's own estimate?
I don't think the government will have an estimate for the private charging, because private charging will really grow based on the demand that comes from private users. On public charging, however, I think the government is planning to go up significantly over the next 5 years, primarily through a lot of governance inputs. They're trying to set up everything under the Delhi Transco Limited and having a sort of streamlined single window process to actually ensure that private operators can also come in and set up charging in a timely manner.
I see. Virendra, the number that you said, right, 25 to 30,000 charging stations in Delhi, what is the share of government in this?
See, the large part of the charging points would be private, which would be essentially home charging, catering to 80-85% of the charging need. So today, I think instead of putting a number to the charging infrastructure requirement, it is more towards creating a reliable charging infra. See, in India, the primary charging will continue to be supported by home charging. And if we look at this policy, the policy covers a mandate for new buildings to create charging infrastructure. It has covered discussion with RWA, societies, workplaces, which is primary place where EVs get charged.
But Virendra, in a case like Delhi, right, in many, I mean, RWA is, yeah, there are, but I mean, it's more, there are older colonies, it's a much different situation, very different compared to the situation in Bombay, right? So
this situation is there in all the major metros in the country, and that's why Tata Power and including OEMs, I would say, has created something called a community charging, where consumers don't have dedicated parking. There are community chargers which are created inside the RWA, which caters to the occupants of that particular society. It becomes like a common infra created inside the society at a common parking. And that caters, and it is working fantastically well in major cities like Mumbai, Pune, Delhi, Gurgaon, Bangalore, Hyderabad. I think that will continue.
Yeah.
Plus, we are seeing a very good traction from the workplace charging also. Corporates are taking active part. They are getting charging infrastructure deployed. Many of them are also, rolling out policies for their employees to adopt for electric vehicles. So that also, because an employee spends about 6 to 8 hours in the workplace, and that's an ideal time to get an EV charged.
Yeah, this incentive for charging stations, Virendra, the Delhi government will provide. This is to, I mean, say for example, Tata Power is setting up. It'll be to the consumer, it'll be to the company.
See, as of now, the policy did not speak about the incentive which it will provide, but generally it is both sides. There are there are incentives which are provided for setting up charging infra. There is already a Ministry of Heavy Industry scheme which covers charging infrastructure under PME Drive, and there is an outlay of 2,000 crores, which gives subsidy of up to 70% on upstream power infra for private locations.
Okay.
Although
I know the numbers will vary, Virendra, but just leave us with what is the cost of like a average in a okayish, not too tough location to set up a private charging point, and what is the cost of setting up a public charging point now?
It would vary from a lakh of rupee for a slow charger to about 20 lakh rupees for a 100 kilowatt charger. Maybe, it varies from location to location because the cost of upstream infra differs for each location.
Got that. Thank you very much for joining us, Virendra. And it's a discussion which we will keep having once we have more clarity on the incentive scheme in terms of how it operates as well. Chaitanya, thank you very much for being here on CNBC TV 18 as well. I think we will sort of continue to discuss this, but I think the capital market space with all these issuances, I think, is also going to be in focus, Rima.
Well, indeed, we've got so many large issuances on the pipeline. There's Jio, NSE, PhonePe, SBI, AMC, Zepto. So let's get in Abhinav Bharti, Managing Director, Head of India ECM, JP Morgan. Abhinav, hi, morning, and great having you. This is Rima here. So would these 4-5 large IPOs together approximately rake in more than $10 billion? Is that the correct assessment? And what's the pipeline looking for H2?
Thank you, and morning to the entire CNBC team. Yes, you're right. I mean, there are some large IPOs lined up for second half of this year. Without going into specifics of each, I would say, we are tracking close to about 7 to 8 IPOs that could raise $1 billion or more second half this year, which cumulatively between them should easily add up to a number between $10 to $15 billion. You add the rest of the pipeline, could we be on track to do another $20 billion IPO year? I think the potential is very much there.
Okay. Will the sequencing matter who comes out first, or do you think the appetite is large enough for all of them? And would this be the most that we've raised in 6 months in the second half of the year, the best performance, half yearly?
Number one, I would say the last 2 years have shown that the depth of the market in India has now exponentially increased. So I'm not so worried about the sequencing. The market depth is deep enough to support multiple large offerings at the same time. Remember, there will be secondary market activity in terms of blocks and follow-ons that will continue alongside. Your question on largest second half, potentially yes, although last year also came very close to these numbers. If you parse the numbers, I think for the year as a whole, we raised about $68 to $70 billion. And till at least early May, till Operation Sindoor got done, we had only raised about 9 or 10. So nearly 60 billion got printed in 7 to 8 months. Something similar could be seen, or maybe not to the same extent, but yeah, close to similar levels this year as well.
But this is still a fraction of the kind of money that's being raised in the United States itself, right? Even if we get to $20 billion, SpaceX itself was, $87 billion. You throw in what Alphabet raised at $85 billion, Cerebras and so many others. When you speak to your foreign counterparts and talk to them about the Indian IPOs, which are upcoming, considering just how small they are in comparison to them, do they find mention? What is the interest level like?
One of the big takeaways that we have seen this year, and especially coming from not just US, but even in Europe as well, is that the fact that the deals are continuing to work well, have made money for investors. The appetite to, continue investing in primary capital and primary paper has increased much more. There is still more depth out there in the West. Anything which is $1 billion plus in size, honestly, flags across almost all global screens. To that extent, I mean, some of these large IPOs, as we have started, filing and the initial conversations with investors have started, everybody has come back saying, yes, these are on their radar. These are names which are of relevance for them to evaluate. Nothing between, their larger deals. So I would say the interest and focus from global investors for offerings of these size remains quite high, even despite what is happening in the US and other markets.
There was, I think, JPM only which pointed out that apparently the green shoe option of SpaceX, if the green shoe was a IPO in itself, it would have been the 6th largest IPO ever.
Wow.
The green shoe option of SpaceX. So, and I think there are, it's just incredibly large numbers we're talking about. Trillion is the new billion. What else to say? Abhinav, where is there most excitement? Which sectors do you think are investors most excited about? I mean, or is it going to be very, company to company? And what's your sense?
Right, Prashant. Look, company to company, of course, remains, and that's the beauty about IPOs. That it's the individual opportunity that excites investors and the ability to play that, not just the sector thematic. But if I were to really look at anyone which has a long-term thematic, consumer tech, healthcare, these are the names that you would see raising a reasonable amount of capital going into the second half of this year in India. And all of those score pretty well and high on investor radars.
I see. Just talk to us a little bit about the secondary market, the blocks and the sales and the promoter, the investors. I mean, that's in full flow, right?
Indeed. And look, the fact is you need that circulation of capital continuing because at the end of the day, investors who invested in the private stage do need to find capital or exits out and be able to recycle that capital. The fact that the secondary markets are continuing is an important aspect of that. In our view, this year has been slower than the last 2 years. If you really look at half year, we've only done about $10 billion in block activity. Each of the last 2 years was 30 billion or give or take in just the secondary market ABBs. So there's a long way. Maybe we remain not touching those $30 billion kind of numbers this year. But yes, you will continue to see that part of the market also remain fairly active.
No, absolutely, and it's I think it's a slower year. I guess that's why we've got you, Abhinav. It's a busy year.
I mean, the way I see the prognosis for India going into second half of this year is pretty strong.
It's pretty strong. I just hope all that money that churn, it comes back, it churns back and rotates back into the secondary market or IPOs, etc. But just a quick word, what's the number you think we should expect this year in terms of these sales, secondary sales?
Okay, so look, I'm tracking close to about another $35 to $40 billion worth of paper that could come to the market second half. Nearly equally split between IPOs and follow-ons/blocks is how I would put it. That would take the full year number again closer to 60 billion. Last 2 years were closer to 70. So very much in line with what we have seen in the last 2 years. And again, reinforcing the fact that the depth in the Indian market continues to remain pretty high as well as liquid for investors.
Okay, I think we need to change that flash. It's $60 to $70 billion of the total fundraise. So IPOs, blocks, offer for sale, all put together this year, FY27 could track $60 to $70 billion. Abhinav, thank you very much for joining in, and apologies for making you wait as well. Appreciate the conversation today. We will get into a break. On the other side, Manisha will join in to talk commodities. Stay tuned.
Jimmy?
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Brian for that.
Welcome back. Let's talk commodities now. Manisha is joining in as always. Manisha.
Thank you so much for that. I have focus on silver today because we've seen the prices gain up by 3% overnight, so much so that we are back above $60 an ounce yet again. For the week as well, it's 6% on the higher side. On a monthly or on a YTD basis, we still are trading in the negative there. But year on year, silver prices have, remember, gained 70%. Take a look at what we've done in sense of silver prices in this year. We did see an all-time high of $121 an ounce. That was in month of January. June has seen a low of 57, so more than 50% of a correction coming in. Currently, we are just about holding $60, $62 on the higher side there. The support for the silver prices has been on. Remember, this is the 6th straight year that we are looking at a global deficit. The demand from solar, EV and AI continues to be quite strong for silver, and the deepening production deficits. We are almost estimating a 46 million ounces of a deficit in 2026. So the markets believe as and when the profit taking is done and there is consolidation in prices, those are perhaps accumulation level coming in for silver. But the silver imports into Indian markets already have seen a very sharp decline. That is January, 747 tons. That is when we saw ETF demand at a record highs as well, and silver prices hitting record numbers too. And then Feb also saw very strong imports. And after that, you can see a very steady decline come in for silver. It was in the month of April that the government put in that import duty hike from 6 to 15%. And at this point in time, there are import restrictions on silver, whether it is in jewelry form, bullion, powder, granules, and that has led to a 3-year lows in sense of imports of silver in the month of May at around 47 tons. Now, we do understand that there is a decline in jewelry and investment demand for silver, but as far as industrial demand for silver is concerned, that is pretty inelastic. And also, India meets nearly 80% of its demand via imports. So the kind of volatile moves that we're looking at and the import restrictions on silver, that is a bit concerning going forward. As of now, even as we are trading at around $62 an ounce in the international markets. For the Indian markets, we are trading at a premium of around $5 to $8 an ounce. So that's the kind of divergence or a disparity that you're looking at in the international markets and the Indian markets as well as far as silver goes. I want to quickly take you through on the silver price forecast going forward from here. As I've told you, we've seen a range this year between 120 to 57 on the lower side. Bank of America believes that we could be looking at higher highs, all-time highs at 135. 85 to 100 of a range is what is Goldman Sachs putting out. And then you have 110 from Citi. JP Morgan believes that you could be looking at lower prices, but much higher from where we are trading right now. We are at 60 right now. So all of these forecasts in that sense are still on the higher side. And then you have Commerce Bank, HSBC as well, believing $75 an ounce is what could be an average price for silver for this year. TD Securities is quite bearish at 44. So another $20 down from here as well. For the Indian markets as well, you have Anand Rathi talking about 3,25,000. We are trading at 2,40,000 right now. We've seen a low of 2,17,000 as well in this week itself. Motilal Oswal at 320, Mirai at 240, and 3 lakh is what Axis also believes we could be looking at. Last year, same time, prices were at around 1,20,000. We've seen an all-time high of 4,20,000, and from there, this is an average that we're looking at for silver prices in this year now.
Thank you very much for that. On the other side, Lata speaks to Saurabh Garg, Secretary in the Ministry of Statistics, on the new IIP series and other Kospi data.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome to It's the Economy. India's Ministry of Statistics, or MOSPI, has been on an overdrive, updating all the data series. We now have a new GDP, CPI, IIP series, all of them updated with new base years. Now, the new IIP series was first put out on June 1st, and then within a month, it was revised on June 29th. Why? Because in between, the Commerce Ministry released a new price index called the Producer Price Index, PPI output, which will eventually replace the Wholesale Price Index, the WPI. Now, MOSPI is using this new output PPI series to calculate the IIP, the Index of Industrial Production. Hence, the revision. To understand more about the new IIP series and other data, I have with me none other than the Secretary of the Ministry of Statistics himself, Dr. Saurabh Garg. Dr. Garg, thank you very much indeed for your time. Sir, let me start with my confusion about the IIP itself. Initially, we used to be under the impression that IIP counts how many more televisions were produced, how many more computers were produced, whereas the GDP or GVA, gross value add, counted the input price and the output price of the product and looked at the value added. That was the basic difference we thought between IIP and GVA. Now you are deflating IIP also. So now IIP will also be calculated like GVA?
So let me first clarify that IIP is an output measure only and doesn't calculate value and will continue. The older series was an output value, and the new series is also only an output value.
Okay.
The difference is that in the older series, most of the items were based on volume considerations. But even in the older series, we had around 107 items, or 109 items out of 407, which accounted for 19.2% of the total weight that were measured on the basis of value.
Okay.
In the new series, there are 234 out of 463, as you can see, which comprises about 36% on the basis of value.
Okay.
And the reason why we need to take into account certain items on value are primarily because of three reasons. Number one, where the products are not homogeneous, they are heterogeneous in the same item category, that's one. The second, where there is widely different quality differences between products produced in the same category.
Okay.
And the third is a set of products whose production cycle extends to more than a month. So therefore, during the period, we have to consider a work in progress for a number of items. So for these three items, even in the old series, we did have around 19% value-based. And in the new series, it's 36%. In the old series, for these 90% of the values, we use the WPI to deflate them so that we are actually in the IIP only reflecting the output or the number of quantity that we are reflecting. In the new series, because it's 36% of the total weight of the products is on value basis, we have now switched to the PPI, which internationally is considered to be a better measure than the WPI when we are talking about ex-factory gate. So I think conceptually there's no difference between the two series.
Okay. Yeah, no difference. In that case, will you be, when you're calculating GVA, will you now, the Ministry of Commerce is giving us this PPI output and PPI input on a trial basis. So will you be recalculating all the GVA also of the last 3 years? And if yes, by when will we get it?
We had mentioned earlier that we would be switching from a WPI to PPI. And I think that's a work in progress. And within the next few months, we hope to be able to use the output PPI to deflate the GVA also on an output basis, because it requires a substantial calculations and a validation and a check on the data. So that work is going on. I won't really like to comment on the time frame, but it would be within the next few months. Secondly, as far as the input PPI is mentioned, since it's a new index, it's a trial index, and we will study that data and then take a decision on that.
Okay. So will the new IIP also impact the GDP? I mean, we are going to get the next GDP number on August 29th. At that time, August 29th or 31st, whichever is the last working day.
Yeah.
You know, if you include this new IIP, will the previous GDP and GVA numbers change?
So we are looking at, as I mentioned, we are looking to incorporate the PPI in this the GDP calculations, and the IIP doesn't get directly reflected into the GDP or GVA. The IIP also uses the weights which are based on the national accounts. So in any case, the IIP is the causality, if at all, I would say it goes from GDP to IIP rather than the reverse.
Okay. Okay. So let me then come to the, this PPI series which the Commerce Ministry is releasing. I know it is unfair. It is a Commerce Ministry product, but you are going to use it, you said. Now, when you look at their services PPI, they have 7 indexes, right? 2 of them are on banking. I have not understood why they are different. Why should there be 2 banking PPIs? And then there is one for insurance, one for securities transaction and pension calculation. Now, first of all, what is the difference between the 2 banking? And will it start reflecting in August 29th or by the next GDP number?
Yes, so one is a banking services price index and there's a banking services contribution index. Okay. So what is really relevant is the price index, because price index has both, it deflates both the direct services which are offered and secondly, which are offered as an intermediary. Both are accounted for in the price index. The difference in the contribution index is the fact that while there is no difference between the direct services offered, in the indirect services or the intermediation services, the weightage for the different intermediation services also adds on to it the growth of that particular intermediation service between the last year and this year. And it gives an indication of the contribution that intermediate service is providing in the total value of the output that the banking industry is providing. So as far as GDP is concerned, where we are bothered about the price differences rather than the overall contribution that it makes to the revenue or the profits of the banking services, which the contribution index provides, our focus is on the price index.
Got it. So, but if you looked at the 7 indexes, most of them are on finance. One is banking, insurance, securities, transaction. Can we get those 7 items up again? And then there is, of course, telecom and transportation. But when you look at our GDP, there is a lot more services. Only one item, finance, real estate, etc., includes banking. Then there is trade, transportation, broadcasting, etc. Then there is professional services. None of these is available. How will you deflate that? You will continue to use CPI?
Yes. So on this, there are 2 things. One is that PPI services is essentially looking at it from the producer's point of view. In most of the services, the consumption is at the time of production itself. Unlike in goods, where there might be some logistical differences involved or logistical issues involved, there would be trade margins and there would be transport, etc. In most services, that really is not the case, except a few. So as a starting point, the Ministry of Commerce and Industry has brought out this services index, which covers these 7 services. Based on one is on data availability, number 2 is on the need for a separate PPI services, which is substantially different from the CPI for that particular service. And third, on the frequency of the data availability, this PPI services may get worked upon, expanded, improved as we go along. So as a starting point, we are at these 7 services, and let's see how we proceed based on need and feasibility.
Okay. There is no chance that all this will be merged into the MOSPI. It makes more sense for the Ministry of Statistics to handle WPI also, isn't it? Or PPI, as the case may be. But it's going to continue with 2 different ministries?
I think there are advantages on either. You can talk about both the advantages and disadvantages on either it be. But I think it's in Ministry of Commerce and Industry, we work very closely with them, and I don't think there's any problem in that.
Okay, fair enough. No, I was just asking because you all seem to be the professional statistics, unit. The other thing is, you all give IIP on 29th, GDP on 30th, CPI on 12th or 13th. Can the data be given together? That makes, that helps, rather than giving data all through the month. Every week there's something coming. And any chance that we should be able to get IIP and CPI together?
A lot of this depends on when the data is available and how fast we want to do it. For example, CPI we bring out within 12 days of the end of the month, which internationally is among the fastest that the inflation numbers are out. For industrial production, and CPI is based on our people. We have people on the ground who go week to week, day to day in the previous month and collect the data on tablets, which gets uploaded into our platform on the cloud, and we are able to do that processing so fast. For IIP, the data comes from the factories. Okay. The factories obviously need time after the end of the month to upload that data, and then we need to validate it and then check it and then compile it. So there is a difference in the method of collection. It would not be, I think, wise for us to delay CPI to ensure that we meet the timelines of IIP. And IIP, if you remember, we used to bring it out 42 days, yes, which timed well with the CPI of the next month, but it meant that we got the IIP data 42 days later. That's right. Now we are doing it within 28 days, which again is extremely quick. Okay, so I think the balance would be between doing it quickly and then trying to get all the data together. Okay. And I'm sure it helps you to analyze each piece of the data separately in any case.
All right, fair enough. I was just wondering if we could, that system also had its advantages. Very quickly, sir, out of time, just one question. Because the PPI Services Index, which the Commerce Ministry released, is actually showing a fall in prices in banking, insurance, and I think even in securities transaction, it is falling. Now, that gives the impression that the GVA will be revised higher in the months to come. Is that a good guess?
So it depends, number one, on the weight of that particular service. What is the weight in the overall GVA? So that will determine what is the impact that would happen. And second is GVA is, we are calculating based on the input and output difference. So I think it's too early to really comment on what would be the impact on the overall GDP because of a price deflator being slightly lower in one set of area.
Okay. Yeah, fair enough. It's only one element, but it does look like there is an upward bias. Dr. Garg, we have lots more questions, but you all are going to give us, for the first time, a services price index, a services production index as well, ISP, on July 14th. I'll take a rain check from you, literally, and ask you those questions after the ISP is released. Thank you very much indeed for your time.
Thank you. Happy to be here.
Well, that, I guess, clears a lot of doubts for those who are looking at this data very carefully. Wrap up on this edition of Bazaar, and after the break, Chartbusters.
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
Jindal Stainless, India's leading producer of stainless steel.
Concerned about the market dip?
Yeah. Last time this happened, I just stopped my SIP. I don't want to lose more.
But let's get an expert opinion. We have Rakesh who's joining us.
The market has dipped, and that's exactly when your SIPs work the hardest for you. The biggest mistakes that investors make is stopping when they should not. The whole idea of SIP is when the market dips, you're buying more units of the mutual fund with the same amount of money. And that's how the rupee cost averaging works. Stay invested, stay disciplined.
Absolutely. Sip on your coffee. That's the spirit. Let the SIP do what it's supposed to do.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
जिंदल Stainless, India's leading producer of stainless steel.
The rebound in IT stocks continues for the second straight day. Gains led by HCL Tech, which is the top Nifty gainer today. The stock up nearly 4% as it announces a near $1 billion AI deal with European Fortune 50 company.
In the Sun, Zinc is one of the top gainers on the metal index on the back of its Q1 business updates. The refined zinc production grows 6% in the first quarter, while that of saleable metal is up 4%.
A large block deal sees nearly 2.5% equity worth 1750 crore rupees change hands at 1600 rupees for PB Fintech. The stock down 7%. Private equity investor Temasek is likely to have sold stock.
Avenue Supermart is under pressure, down nearly 5% after a weak business update for the first quarter, which shows addition of 3 stores and revenue growth of 15%.
Union Bank registers 3% deposit growth year on year, while CASA ratio contracts sequentially in the first quarter. The stock lower. Well, after a rebound in yesterday's trading session, the IT stocks continue their up move, and that's reflected in the frontline index as well. You're watching us here on Chartbusters. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu, with me, Vinny Motiwala. We conquered the 100-day moving average on the Nifty yesterday, and now as we speak, 24,350. So good gains on the frontline index from the word go. We've been seeing gains. The Nifty Bank, which hadn't participated yesterday, is not a big participant today either, but is neither a deterrent because it's holding above important levels of 58,000 and more important levels of the 200-day moving average, Vinny.
Absolutely, Mangalam, but still we've picked up some bit of a momentum, and that momentum continues, right, for today's trading session as well. And obviously, we're seeing good moves even coming in on the broader end of the market. That is something that we're keeping an eye out on. But also, let's bring on board our guests for today. First, we have Nagraj Shetty for a technical check in terms of the market as well. Nagraj, good morning. Thank you so much for joining us on the show. In terms of levels that you're keeping an eye out on for the Nifty as well as the Bank Nifty today.
Hi, good morning, Vinny. Yes, after moving into a range-bound action over the last 2 weeks, Nifty finally broken above the important hurdle around 24,200, 250 levels and trading currently higher. Technically, this is significant. The market was moving in a choppy movement over the last couple of months, and the momentum has back to shifted on the upper side. This is positive indication. I'm expecting Nifty to move towards the next hurdle of around 24,500, 600 levels in the quick period of time. And the Bank Nifty has been showing some consolidation in the last 2 sessions because the Nifty IT and Metal has taken the leadership in the market.
I think the overall chart pattern is banking sector is still positive. This consolidation phase is just a preparation of a base for the breakout for the banking sector as well. From here onwards, I'm expecting Bank Nifty to reach towards 60,000 level in a short period of time.
All right, take that point. Nagaraj, I have to ask you about the IT pack as well. The last session was fairly strong. Most believe that maybe it was just a bounce off oversold levels. Today, there is momentum. It's building. It's 27,500 thereabouts. Still a fair distance away from, the 20-day moving average, which is just where we are right now on the IT index. Do you think it continues and it builds beyond that?
Yeah, maybe 20-day moving average can be surpassed on the upper side. But, Mangalam, that IT stock has been in IT sector, in fact, has been in a sharp downtrend. And normally underlying, whenever in a sharp downtrend, the bounce backs are likely in between. They are just forming lower tops and lower bottoms. I'm not expecting any bigger upside bounce for the IT sector from here onwards. Some more upside is likely up to around 28,500, 28,700 levels, the gap area of the hurdles which made a couple of weeks back. And even though after that, I'm expecting some more weakness to emerge from the higher levels in the IT sector in the near term.
Nagaraj, any individual stocks that you're looking at this morning?
Yeah, I have two stocks. First one is from a gold finance company, Manappuram. Chartically, Manappuram was moving in a consolidation pace, narrow band in the last couple of weeks, faced a stiff resistance around 332, 333 levels. The current chart pattern is indicating a possible breakout of the whole pattern. And one can look to buy at this point of time, currently trading around 333, and immediate target would be around 355, and one can place a stop loss at 322. Second one is the EMS Limited. The chartically, after a stellar move, the EMS was moving in a consolidation phase. Technically, we call it as a bullish pennant or bullish flag pattern. And this flag is likely to be broken out around 432, 33 levels at this point of time. The chart pattern is looking positive. I'm expecting more upside. Currently trading around 431.70, 432. One can look to buy at this point of time. And immediate target would be around 452 and will place a stop loss at 420.
All right, Nagaraj, thank you so much for joining in and giving us your views on indices as well as individual stocks. We take a short break, come back, a special conversation lined up for you. The management of Inox GFL to discuss Adar Poonawala's 700 crore investment in Inox Clean. Devansh Jain joins in.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
Welcome back to Chartbusters on CNBC TV 18. As of now, Nifty holding steady at those 24,300 levels. Above that mark is what the Nifty continues to trade at. But let's just focus and talk about Inox Clean. Now, the company has actually secured a 700 crore investment from Adar Poonawalla office. And this is at a valuation of 70,000 crores, underscoring investor confidence in its renewable energy platform. To discuss the roadmap in terms from the renewable energy point of view, what is the strategy here, what are the plans, what are the targets? Let's bring on board Devansh Jain, Executive Director at Inox GFL Group. Devansh, good morning. Thank you so much for joining us on the show. Obviously, in the recent times, you've given a lot of targets for Inox Clean as well. You've spoken about how you're focusing on the renewable energy capacity as well. And now, with obviously this money that is coming in as well, largely an IPP platform, solar manufacturing cell is what Inox Clean focuses on. How was this valuation which you all have gotten? How was that arrived at? Any plans to list in the future for Inox Clean as well now?
Hi, good morning, Winnie. Thanks for having me. I think we're quite excited. It's a opportune moment for us where Adar Poonawalla's family office has invested 700 crores in Inox Clean at a 70,000 crore valuation. Now, this is not the first investment in the group. We've had fairly large investments coming in from CalPERS, RJ Corp, Enam, Akash Bensali, all some over the past 10 to 12 months. And I think these larger investments from very strong institutional backers only reinforces, strongly endorses Inox Clean's integrated renewable energy platform and the long-term strategy which we've set out on, wherein we are targeting about 15 gigawatts of operating IPP capacity over the next 2 years and 11 gigawatts of solar module and cell manufacturing capacity over the next 2 years. This is across 3 continents. This is across India, Africa, and the United States. And I think what really is driving investors towards us, I won't specifically comment on valuation. Of course, it's been done with third-party valuers. There are multiple bankers which have been involved in many of these capital raises. But effectively, if you look at the scale and speed at which we've been growing, it's probably unparalleled in India, possibly even in the world. Over the past 15 months, we've taken this company from 0 megawatt to now more than 4 gigawatt, literally 4 gigawatt of operational capacity. We've created a very, very large play in Africa, which is just on the cusp of execution. We've taken over a very large asset in the United States, which makes us one of the largest integrated players in the United States. And I think that's strongly resonating with some of the largest investors, not just in India, but globally as well.
We take that point, Devansh. Mangalam here. Congratulations on securing the fundraise and, in your words, the confidence of all these investors. But since it is an unlisted company, right? Viewers here would like to know what your current financials are, because when something which is valued at 70,000 crore rupees, one would like to know what is in it for it to be worth that much. That's point number one. And secondly, while you've gotten the confidence of all these guys, they're not just strategics, right? There is a financial element to it too. So at some point, they will consider cashing out or an exit. So what's the exit route for them?
Look, I'll answer the second part first. I think with respect to the exit route for these guys, I think most of them are long-term investors. Having said that, naturally, at some point in time, we will be filing for an IPO. As some of you may have been aware, we had filed for a confidential listing of Inox Clean last year. But since then, we've completed almost 9 acquisitions, totaling almost 10 acquisitions now over the past 10 months. We had significant opportunities, and hence we thought it prudent at that point in time to withdraw, get a lot of the acquisitions on the book, make the balance sheet much stronger, the business plan much stronger, and then possibly refile for an IPO. So at some point in time, over the next couple of months, you will be hearing on that front. With respect to the valuations, look, I think it's pretty straightforward. It's a sum of the parts valuation. You've got an IPP element to it. You've got the solar part broken into 2 parts, the Indian business as well as the American business. and we know what the volumes are, what the numbers are. Multiples are pretty straightforward on the IPP side, as well as the Solar India and the US side. So when you put a 1-year number to it or a 2-year number to it, you can really put together what the valuation of the company is. Frankly speaking, we believe there is a lot of juice left. And I think as we move forward over the next 3 to 4 months, we should be seeing a fairly large bump up even to these numbers, given the ramp up which Inox Clean is currently working on.
Just to get that right, in the next couple of months, you will be filing for the IPO papers for Inox Clean, right?
That should be the broad plan.
And what does the current shareholding look like? How much of that is held by the Inox Group? Is there any other listed entity cross-holding in this? If you could give us a sense of the cap table, basically.
So there is no cross-holding whatsoever. About 95% of Inox Clean is currently owned by the promoters, which is the Jain family and Inox GFL. The cap table primarily includes CalPERS, Autumn Investments, RG Corp, Enam Akash Bhansali, is Madhukela, Rohit Kothari, Hero, DLF, some of India's largest family offices, and now other family offices as well.
Okay. Devansh, thank you so much for joining us on the show, speaking with us about Inox Clean, and papers will be filed soon. We'll keep an eye out on that and have more conversations with you on that front as well. So thanks so much for joining in this morning. But on that note, let's shift focus to a special segment where we will get you ideas of profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us now to talk to us about the stock that he's been tracking closely. Jitendra?
Hi, thanks. We continue to like Ion Exchange despite a relatively muted FY26 as the weakness appears temporary. The slowdown was driven by project execution delays in the engineering business, and due to West Asia crisis, margins pressure was there because of the chemical segment. Management now expects a much stronger second half as some of these issues ease. Ion Exchange remains a leader in India's industrial water treatment market with strong capabilities in zero liquid discharge, desalination, wastewater recycling. The company is well positioned to benefit from the tightening environmental regulations and rising industrial water demand. Moreover, if you see, earning visibility is good, supported by order book of around 2,338 crore with a bid pipeline of almost 9,500 crore. Delayed GCC projects have resumed execution, which should accelerate revenue recognition and support margins recovery. Meanwhile, the fully operational Roha facility, backed by attractive export opportunities, should provide important support to earnings in FY27. The 20-year Oman Boot project also strengthened the recurring revenue and cash flow visibility with execution normalizing. Of course, industrial capex improving and exports expanding. Earnings growth should be better in FY27. At around 21 times FY28 estimated earnings, valuations remain reasonable, and we maintain our overweight rating on the stock.
Right, Jitendra, thanks a lot for that. We take a short break, come back, get you more on the markets, a lot of individual stocks on the other side. Stay with us. Looking good for the market, led by the IT pack. And in that, the top Nifty gainer is HCL Tech after it signed a near $1 billion deal with a European company. Rima joins in with all the details. Rima.
Thanks so much for that. Indeed, it's a large deal win for HCL Tech, $1.14 billion initially for a 5.5-year term, extendable by another 5 years. And most importantly, this is 100% net new business for the company. So the company said they've signed a strategic partnership with a European headquartered Fortune Global 50 firm, and they will be building an AI-driven operating model for global digital workplace and enterprise networks. So it's an AI deal. It's a large deal of more than $1 billion net new over 5 years. Now, stock, of course, for the last 2 days is rebounding. And even after that, it's down about 30% so far this year. But there was an interesting note that came out from CLSA where they say that HCL Tech has been credited with a lot of industry-first initiatives. So HCL Tech was the first to flag off deflation related to AI in August of 2024. That's 2 years back at an analyst meet. Secondly, they were the ones to partner with OpenAI in June of 2025. They were the first ones to disclose advanced AI revenues among the Indian IT peers. They were the ones to make that investment in Sarvam AI, and they're the only management, CLSA says, to not penalize their sales teams for proactively passing on the AI productivity benefits to clients because that lowers the deal values. So HCL Tech, according to them, they expect, CLSA expects HCL Tech to maintain the FY27 guidance on both revenues, that's 1 to 4%, and even on margins. And they also point out a seasonality. So they're saying that over the last 8 years, HCL Tech has actually given you a 20% return combined over Q2 and Q3. So we are entering a seasonally stronger period, though in Q4 and Q1, typically the stock doesn't do too well. According to CLSA, HCL Tech could be the fastest growing large cap IT company for the 4th straight year, and it is one of their top picks in the sector with a target price at 1,202. Back to you.
Okay, Rima, thank you so much for that. HCL Tech as of now is holding on to gains of 5% in trade. And when you look at the Nifty in terms of that, we are at 24,300 levels. It's been there since we started the show as well. But with that, we're going to wind down this edition of Chartbusters. Thank you so much for tuning in. Up next, your trading hour.
Highly
Good morning. It's time for Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormus Fatakia. With me is Reema Tendulkar. And the last 2 days that Reema has been on the show, the IT index is staging a very sharp rebound and is contributing to the Nifty moves today. It contributed yesterday as well. And today we are back above very, very crucial levels.
Well, indeed. And with that, though, we're still up only 1% on the index because the first half of the week was so weak. But it's a very strong Friday. The Nifty had a gap up opening and it's managed to hold on to all those gains. In fact, build a tad bit on it. And the Nifty is now closer to 24,350, a gain of about 170 odd points. I think the only soft spot in today's trading session are banks, particularly the PSU banks. So you've got a PNB, a Bank of Baroda, an Indian bank. And here are the business updates that have come through are slightly lower than analyst estimates. So that's the reason why PSU banks are struggling a bit. But other than that, IT adds on to the 4.5% rally of yesterday with another 2.25%, today. You've got the metal index holding up with a gain of 1% as the dollar index cools off. Pharma is seeing a lot of buying. Real estate is higher in trade. And many of the PSUs too are up and about. But let's talk stocks now. So Hormus has walked over to the big wall and he's going to put the spotlight on the top movers.
There's a weak first half and equally strong second half, if not more. And the bulls are making this thing very clear is the fact that they want to end the week on a high. And this is despite the fact that the banks are taking a bit of a break, not today, but over the last couple of days as well. The Nifty bank has not gone anywhere over the last couple of days. So what has led the index higher? IT has been leading it yesterday. IT has led the index today as well. And the result is the fact that despite the weakness in the US dollar seen overnight has also caused a rebound in a lot of these metal names and the pharma names and the real estate stocks also doing very well in today's trading session. But now that the Nifty is above its 100-day moving average and very important levels of the 24,200, 24,250 levels, there are two important levels that open up on the upside for the index. The first one is the May 7th high of 24,482. That is from where the index reversed course back towards that 22,100, 22,500 levels. And then again comes the April 21st swing high, which is the original swing high from where the index had reversed again, which is 24,601. So 24,482, 24,601, the next levels to watch on the upside for the index. Of course, IT has done well over the last couple of days, but it is mid-cap IT that has been taking the spotlight. Look at Emphasis is up 3%. Persistent Systems was up 5% yesterday, is up another 3.5% in today's session as well. And Oracle Financial too. The only IT stock that is positive on a year-to-date basis is also adding another 2% to its tally today. The weakness in the US dollar index has sparked a bit of a rebound in the metal names as well. Nalco was a big underperformer. Today is doing well at around 3.5% higher. Tata Steel, Hindustan Zinc, of course, not just for the business update, but also because of the rebound in silver prices as well. That's up another 2%. And SAIL has come off slightly from the highs of the day, still holding on to some gains. Take a look at the newsmakers today. HCL Tech, you just heard from Reema a few minutes ago about what exactly is keeping the stock in the news. 6% higher now on the stock, extending its gains as we speak. Muthoot Finance, similar to HZL, the rebound in gold prices is causing a rebound here. PB Fintech, after its block deal at one point was down 7 to 8, so there is some buying emerging at lower levels. And Bank of Baroda was down around 5% yesterday, is added another 3.5% to that downfall in today's session as well. Look at the business updates as well from that were reported last evening. Union Bank is down 6.5, but 5 rupees from that 11.5 is of course the 5 rupee final dividend, so it's ex-dividend as well from today's session, so you need to take that into account. Avenue Supermarts, of course, weak business update, so 4.5% lower there. Bajaj Housing Finance has received an upgrade from JP Morgan after its business update, so that's up 3%. And M&M Financial doing well for itself, another 4% in today's trade. And lastly, Pharma as an index did well last week, has done well this week as well. And these are all of these names that are at 52-week highs today. Look at Aurobindo, Ipca Labs, Apollo Hospitals, Torrent Pharma. All of them have extended their gains in the last few minutes, and all of them trading with gains of anywhere between 2.5% to 4%, Reema.
Okay, thank you very much for that. Now let's talk about the financial stocks reacting to the Q1 business updates. Ananya joins in with the details and which ones should be on your watch list today.
So, well, good day for NBFC stocks. All are rallying. Bajaj Finance, Bajaj Housing Finance, and Mahindra Financial Services, while Union Bank is under pressure today. Now, let me first start with Bajaj Finance. Now, it kicked off FY27 with AUM growth of 24% year-on-year and 7.2% sequentially towards the upper end of its 22 to 24% guidance, alongside record customer additions and a 20% rise in new loans. Now, coming to Bajaj Housing Finance, they also reported a steady quarter with AUM growing 24% and disbursements rising 33%. Now, JP Morgan upgraded the stock to neutral from underweight, and target price is set at 85. But noted that the stock continues to trade at premium valuations when we compare it with the peers like PNB Housing Finance and LIC Housing Finance. So, PNB Housing Finance remains the top pick for JP Morgan. Now, Mahindra and Mahindra Financial Services also delivered healthy set of numbers. You can see the stock is also rallying today with disbursements rising 21% and business assets growing 12%. Collection efficiency moderated to 95% from 98% in the March quarter, though it remained stable year on year if you see, while stage 2 and stage 3 asset quality improved. Now, on the other hand, Union Bank reported healthy advances if we see growth of 12.5% and stable CASA ratio, but weak deposit growth and a sequential decline in deposits appear to be weighing on the stock today.
Ananya, thank you for those updates there. So a slew of banking NBFC updates, all of them have come out. Of course, we are watching out for an update from the big boy. HDFC Bank should be out anytime soon now. But Bajaj Finance, Bajaj Housing, all of them doing well for themselves. In fact, Bajaj Finance is now well over 30% higher from its 52-week high, which was sub 800 at the peak of the Iran war. Now, shares of power equipment makers, Hitachi, GE, Vernova, Siemens, all under pressure today after a note sourced from IIFL suggests that India has allowed 4 Chinese-linked power equipment firms to bid for government projects. Vinny is joining in with more updates on this. Vinny.
Hi, morning. So yes, absolutely. This is what we're picking up from the note that's coming from IIFL, right? Where they're saying that Ministry of Finance has this is a grant that is given for 2 years exemption for 4 of these Chinese companies. There was already some exemption that came in for TBEA, which was one of those Chinese players. In Feb 2026 already, the category was around for a 1-year exemption. Now this has become a 2-year exemption. Now there are 3 more companies that are added to that list as well. Nanjing Electric India Private Limited, New Northeast Electric India Private Limited, as well as Takai Electric, which are Chinese companies which are based in India, right? So now what is the main reason behind this? They've also put a condition that there is going to be local made content that comes in will be 50% minimum in all of this as well. So that's a condition as well. Yes, obviously we'll see some bit of an impact that comes in for the transformer power equipment players as well. So all these players, that's why are seeing a decline in today's trading session. Now IIFL furthermore highlights as well that this move was something that they're not expected. TBEA was something that was known, but widely it was not expected for these other companies. Now they've said that the domestic pricing is peaking out, Chinese competition, that was flagged off 6 months back, but there is a bit of a risk that comes in on the sentiment front for this. Do not forget that Indian players also on the transformer side have already announced capex for FY27 as well. They're already working on the transformer capacity as well. So that impact could be a bit minimal. We already knew about TBEA, and this is just an extension that comes in for 2 years. Nonetheless, it's a negative on terms of the sentiment. But yes, long term, because all these companies have already made the capex plan, we'll have to see how it works. And HVDC projects will likely not see a major impact because of this as well.
Thank you very much for that important story. Stocks are reacting. Get into a break. On the other side, we'll discuss the bond markets with Manisha Gupta. Stay tuned.
Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome to Bond Street. Our guest today is Riyaz Tingna. He's partner Grant Thornton Bharat. Mr. Tingna, hi. Thank you so much for joining us here in the studios.
Pleasure.
First of all, let's start where most people start really, and that is about fixed deposits, bond interest versus FD interest. Is the tax treatment identical, or is there a difference that the investors routinely miss?
Well, the starting point is the same. Both of them are taxed as income from other sources, but that's where the similarity ends. Fixed deposit interest taxation is straightforward. You just have tax at the standard applicable rates for the investor. With bonds, yes, some exemptions may be available, but with bonds, there's a little more attention that we need to take. There could be tax-free bonds, there could be listed bonds, unlisted bonds, government bonds where there'll be no TDS, but there's still tax on those bonds, etc. So with bond interest, there have to be some nuances that we have to take into consideration, whereas fixed deposit is very straightforward.
All right. On the TDS front, as you mentioned that one, when does tax get deducted at source on bond interest, and at what rate, what does it work differently for listed versus unlisted bonds?
So the TDS on bond interest is pretty straightforward. So you've got 10% TDS provided you cross the threshold limits. Of course, if they are tax-free bonds or government bonds, there may not be any TDS. But again, you know, for government bonds, if there's no TDS, doesn't mean that there is no tax. You would still have to pay tax along with your tax return. And similarly, you know, the other way around will also work. So if there is zero tax, there's still taxability, and similarly, if there is TDS, does not mean that it's a final tax.
All right. For retirees and zero tax investors who don't want TDS deducted at all, this is the first year of a big change. The familiar 15G and 15H have been replaced by the new Form 121 under the 2025 law. Do walk us through all of that, and how does that work?
Yeah, so this is an important change, but we should also keep in mind the timing. So this new Form 121, which replaces 15G and 15H, is applicable from 1st April 26. Yeah. So it means that for the financial year 25-26, Form 15G and 15H will still have some relevance. And another thing that we have to keep in mind is that Form 121 is only applicable for resident individuals and HUFs. Non-residents, firms, companies cannot avail of Form 15G or 15H, and now Form 121. So I think I can maybe add one more thing here, is that when somebody is filing a Form 121, they have to take into consideration the entire income and not just bond interest, because only after you take your total income will you realize whether you're eligible for the form or not.
If an investor sells a bond in secondary market before maturity, how is that taxed on short term and long term? And what is the holding period that decides it for the listed bond?
Great. So, yeah, there is a misconception that if it's a tax-free bond, there's no tax. That's not true. Only the coupon interest is not subject to tax. But any sale, any maturity or any transfer will attract capital gains tax. In the case of listed bonds, it's very clear that if you're holding it for more than 12 months, it will be treated as long term. And if you're holding it for a period less than 12 months, it will be treated as short term. Short term will be taxed at the applicable tax rates applicable to the investor, and long term would be taxed roughly at 12.5% without indexation.
But 54 EC bonds, NHAI, REC, PFC, REFC, I mean, I can tell you we report and talk about this almost on an everyday. And these are a favorite for sheltering capital gains. But there's a lot of confusion about what they actually shelter. What is the exact benefit? What do these gains qualify, limits, lock-in investors that investors need to know?
Great. So first of all, the Section 54 EC investments are not a shelter against capital gains for all capital gains.
Okay.
They are only sheltering capital gains arising out of the sale of land or building or both. So that's the first part. Once you are eligible to claim under 54 EC, then you have to make that investment within 6 months, and the total cap is 50 lakhs. One thing we also need to keep in mind is that while capital gains exemption will be available by investing in these bonds, the interest on these bonds are subject to tax.
Okay.
So therefore, one needs to check exactly what is the real benefit out of investing before you take the plunge.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
जिंदल स्टेनलेस, इंडियाज लीडिंग प्रोड्यूसर ऑफ स्टेनलेस स्टील।
Current phase Iran.
Well, still 150 points higher on the index, so we've not gone anywhere on that front. So the bulls would be happy for the fact that they're still managing to hold on to those gains. 24,330 is where we stand, but the actual action is in the broader markets. RHI Magnesita, which was a stock that outperformed in yesterday's trading session, was in fact among the top traded stocks on the Nifty 500 in yesterday's trade, is witnessing some profit booking in today's trade, down around 5.5% as we speak. Thermax is continuing to have a disappointing week as well. That's down another 4.5% in today's session. So not a good day and not a good week, in fact, for Thermax. D-Mart has extended its losses, now down around 4.75%. So that's not having a good day. But what is having a very good day though is Zensar Technologies. Zensar was up 9.5%, was around 10% yesterday as well, is up another 10% in today's session and has now moved to the highs of the day, 511 on the stock for Zensar. And well, while Aegis Logistics continued to do well all through the week, today Aegis Vopak is the stock that's outperforming in today's session. While Aegis Logistics has seen a bit of a knock over the last few minutes, that's down to the lows of the day, while Aegis Vopak is now up 9% and is at the highest point of the day. But HCL Tech is probably the stock of the morning today, and that is a part of the IT rebound story as well. But that has a news trigger behind it that has taken the stock 6% higher. And Rima, well, it's a big deal for HCL Tech.
It is indeed, because it's $1.14 billion for 5.5 years. The possibility of an extension, it comes in from Europe. And most importantly, it's a net new deal, which means every year, potentially, you are talking about $200 million plus in terms of revenues. And what I understand is this is the largest deal for the company since the Verizon deal, which was about 2 years back. And it comes in from the European space. So if Europe is opening up as an outsourcing opportunity, because currently majority has always been North America, then comes Europe. So Europe, large deals out of Europe is also a big opportunity. So what the company said, they signed a strategic partnership with a Europe headquartered Fortune 50 company to build an AI-driven operating model for global digital workplace and enterprise networks. Of course, not to forget that the stock is corrected. It's down nearly 30% from the start of the year. But there was also an interesting note from CLSA. It's dated yesterday, where they say that HCL Tech has done a lot of industry-first AI initiatives. So the company was the first one to flag AI-related deflation in August of 2024 in an analyst meet. They partnered with OpenAI in June 2025. They were the first to disclose advanced AI revenues amongst the IT peers. They made that minority investment of 10% in Sarvam AI, and they're the only management not to penalize the sales team for passing on the AI-related productivity benefits to clients because it shrinks the overall deal values. CLSA does expect HCL Tech to hold on to its FY27 guidance of 1 to 4% on revenues and even on margins. And they also highlight an important technical aspect. They're saying that historically, Q2 and Q3, which is the period that we are currently in, has been a seasonally strong, period for the company. So in the last 8 years, in Q2 and Q3 combined, they've generated a return of 20% on an average. So CLSA believes HCL Tech will be the fastest growing large cap system integrator company or IT services company for the 4th straight year. It's one of their top picks. They've got an outperform rating. The target price stands at 12.02. So that's HCL Tech for you, leading the gains in the IT pack. We will get into a break. On the other side, Rahul Sharma from JM Financial joins in with his top bets.
Concerned about the market dip?
Yeah. Last time this happened, I just stopped my SIP. I don't want to lose more.
But let's get an expert opinion. We have Rakesh who's joining us.
The market has dipped, and that's exactly when your SIPs work the hardest for you. The biggest mistakes that investors make is stopping when they should not. The whole idea of SIP is when the market dips, you're buying more units of the mutual fund with the same amount of money. And that's how the rupee cost averaging works. Stay invested, stay disciplined.
Absolutely. Sip on your coffee. That's the spirit. Let the SIP do what it's supposed to do.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
Jindal Stainless, India's leading producer of stainless steel.
Welcome back. Going strong for the markets. Persistent has also been recovering after that initial gash on the back of the company announcing that Nagarro acquisition. The stock fell from levels close to about 550 rupees. From levels of 4,800, it came down. And from that 550 levels of a decline, the stock has recovered close to about 450 rupees. So it's still about 100 rupees lower than the level that it was, but it has made a pretty strong recovery. Other IT names that stand out, eClerx is up 6.5%. Coforge, Emphasis up nearly 2.5%. And Hexaware is a stock which has moved up 13% from the start of the year. But let's talk about the futures and options space. Sudarshan now joins in with the latest trend. Sudarshan.
So market is largely higher for second straight, and what is happening, what is basically supporting the market is the IT pack, seeing a sharp short covering for second straight day. You take a look at the Nifty gainer, top Nifty gainer, HCL Tech after the order win. Amongst mid caps also you have major names. You are just talking about Persistent, that also has recovered sharply from day's low. But one concern, minor concern for the market is the banking pack. Nifty Bank has come off sharply highs, but again the positive part, your volatility index. Now India VIX is below 12. It's at the lowest levels that we have seen since February of 2026. So basically at 5-month lows. Now come to the options state of Nifty. On the call side, major short covering we are seeing in the call options of 24,200 and 24,100. At the same time, we are seeing put writing at the levels around 24,300 and 24,350. So it gives you a range for Nifty. So now the new range for Nifty has emerged from 24,100 to 24,400. But to move higher above the level of 24,400, Nifty has to remain above 24,300 comfortably. So support for Nifty I have taken 24,100 and resistance would be 24,400. As far as Nifty Bank is concerned, your 200 DMA of 57,200 will act as a major support, and as far as resistance is concerned, 58,500 would be immediate resistance. What about the stocks from the banking pack? Bank of Baroda not only has given the week quarterly update, but also there is one case has been going on, and that's also is weighing on the stock, and it's sharply off highs and currently down almost 3%. Amongst all the cement packs, one stock is looking very strong is Dalmia Bharat. It's also adding the fresh long, and all the power equipment names have been weak. GE, T&D, Hitachi and CG Power are sharply lower and adding fresh shorts.
Hitachi Energy and GE Vernova. In fact, from the 22nd of June, every single day GE Vernova has ended lower. So 9th straight day of losses now for GE Vernova, down around 20% during that stretch. So not a good outing for GE Vernova. Of course, there's all of these names, be it GE Vernova, be it Hitachi, all of them are up 80-90% this year. So now they are coming off the highs, and you heard from Vinny as well as to why all of these names were down. In fact, Siemens was down around 2.5% at the start of the day. That too has now extended its losses and is now at the day's low. And what is also at the day's low is BHEL, and that's not doing very well for itself as well, is now down 3.5%. So a lot of these capital goods, transformers and power equipment supplier names are not having a good day, having a pretty forgettable day at the office. There you see BHEL, a sharp fall in the last few minutes, down around 3.5% in today's trading session. But well, some interesting technical call also came in earlier this morning, and that was from Lawrence Blanco of CLSA, and he said that while the Nifty itself is trapped within a broad trading range, as you can see that playing out right now, and lacks a clear directional catalyst, the underlying market breadth though remains constructive. And the impending breakout in the Nifty Midcap 100 index suggests the risk appetite is strengthening outside the large cap universe. And he has highlighted that Shriram Finance and Lodha are the ones that stand out as technically attractive opportunities, with both having recently completed a significant basing and consolidation pattern breakout. So these are the two names that he has highlighted a positive view on, Rima, and also spoke about the fact that the broader markets are the ones that are more strongly positioned compared to the index. In fact, he also spoke about gold, and he mentioned that for the first time since peaking in January, gold's corrective phase is showing signs of maturity, with a developing price momentum divergence that has emerged between the lows of the 10th and the 25th of June, and that is suggesting that the downside momentum is beginning to fade, and and this creates an attractive risk-reward accumulation opportunity. Now, on the upside, the initial resistance for gold is between the 4400 level to the 4501 level, where the 50 DMA and the 200 DMA and the downtrend resistance from the January highs, all three of them converge. And in fact, if there is a decisive breakout above that cluster, that could provide some additional confirmation that the correction has run its course and that a new advance is underway. In fact, one point gold had even slipped below $4,000 an ounce on the global market. So there's already a $200 rebound that you have seen from those lower levels as well. So, and I guess you guys also spoke to S. Narain yesterday, and he had a different view on whether you should invest in gold or silver or not.
Well, absolutely. But for now, let's just get in Rahul Sharma of JM Financial Services to find out where we are headed. Rahul, it's been 2 strong days for the markets. We're consolidating. Do you see a breakout above the 200-day moving average? And where do we go from here? What are the key levels?
Yeah, hi, very good morning. So clearly, we've decoupled, at least in the very short term, from the Asian markets. We've seen, markets hold the 24,000 mark and trade above that. Now, 24,500, 24,600 is where the meaningful resistance for the Nifty is. In all likelihood, we believe that, it's a good level to take some profits and sit on the sidelines, because next week onwards we're having the quarterly numbers come in, and there is a possibility that the markets may get disappointed from the Q1 numbers. Just to remind, we've been through a lot of things in the Q1 period when we had the war and the crude oil shock that we all saw. So caution is advised, especially for the next few weeks in the month of July series, especially given the backdrop of Q1 shockers that can come in. However, I think this may be the last opportunity for this calendar year, the last leg of volatility that may come, after which we start a structural recovery from here. So if you zoom out a bit, it seems like September, October, we should see a structural recovery happening into the markets. So the short-term outlook definitely remains a bit of a cautious note for the month of July. However, from a slightly more medium-term perspective, it seems like we should be headed much higher from the current levels and probably test the all-time highs as well by the time we wrap up this year in December later.
You're trying to say we are at all-time highs by the end of the year, Rahul?
Yes, absolutely seems like. So the way the technical setup is happening, we feel that any opportunities, any dips from here could be opportunities to re-enter, and the July numbers that come in, the Q1 numbers that come in, that could be the reason for the markets to provide that kind of an opportunity from a 6-month perspective from here.
The music to the ears for those who lost 8.5% in the first half of the year on the index. But for the immediate, very short term, Rahul, you mentioned 24,600 is a good level to take some profits and sit at the sidelines. But does the index have enough legs to get to 24,600 in the first place? Or do you see there is no meaningful resistance on the charts right now? And is the Nifty Bank more strongly positioned in comparison to the Nifty? Because that's the one that has been doing the heavy lifting, barring the last couple of days.
Yeah, so if you look at the last few weeks post the geopolitical situation subsided, it has been the financials and banks which have been leading the show and doing extremely well. Today we are seeing private banking, witnessing increased buying interest. So yes, somewhere or the other, financials are leading the market in the very short term. There is also defense, which has been doing well. There is also pharma, which is rock solid, which has been rock solid in this entire last 3-4 months time frame. So there are few sectors which are holding head and shoulders above the rest of the market. And whether we do 24,500 or not, probably next couple of sessions will let us know that. But having said that, I think the momentum is clearly for the very short term favoring the bulls until 24,500, 600. Post that, I think it's better to take a relook at it. Now, some stocks which are looking good from the defense pack, one of them is Cochin Shipyard. As a disclaimer, we've initiated a buy on this for our clients. The stock looks good for a target of 1650 over the next 8-10 trading sessions. One can look to buy at these levels, have a stop loss placed at 1490. And apart from that, another one is Tata Steel from the metal pack. Looks good for a target of 200, 205. Stop loss can be maintained at 188. So both are trading actionable ideas. Like we said, it's more of a trader's market and it's better to be one.
Any tactical trades on IT names?
Yeah, so IT is purely a bounce back as of now. We don't see a structural reversal of any sort. So, it's better to be a trader in this space. As of now, we're just waiting for some bit of a dip to happen. Today, we've opened, yesterday IT was the best gainer in the entire market. A bit of dip from here can make our entry look more attractive. At this point in time, we don't really advise initiating fresh longs in IT.
An interlinked question, Rahul. The US dollar index at one point had gone up to 101.5, but after yesterday's jobs report, that's down to sub 101 again. What are the charts on the dollar indicating? And if the dollar is poised for further upside, what does one do to a lot of these metal names? Because a stronger dollar is not necessarily good for all of them.
Yes, absolutely. That is the reason why we saw the metals saw a bit of a correction. Broadly, metals have been strong throughout, but the recent correction was due to this. Now, looking at the dollar index chart, 100.5 roundabouts is a very strong support for it. So in all likelihood, we may see a bounce back from these levels purely from a technical perspective, and it could very well head back to its recent high of 101.6 odd. So yes, it's going to be volatile, and above that 10.5 mark, I think it strongly remains in an uptrend. Unless and until it decisively goes below the 100 mark, I think it's best to sort of be selective in especially stocks related to metals or some of the higher beta names.
Well, one sector that has done very well, Rahul, in the recent times is pharma. It did very well last week. It did very well this week as well. A lot of these pharma names are at 52-week highs. At these levels, you still see buying opportunities, still see more legs because the index is continuing still at the day's high today.
Yes, absolutely. Pharma is sort of very, very strong at these levels. I think that the latest to add to the list of breakouts in the pharma space is Sun Pharma. The stock has seen significant volumes on a comparative basis, above average volumes in today's session. The stock is taking out the previous top of around 1920 odd. My sense is this stock could head very well towards the 2000 mark and can be traded long at these levels. Overall pharma pack, whether it is Oro Pharma, Laurus Labs, Sun Pharma, or even some of the names like Divi's Labs, are positioned very well. It's a matter of just picking up the risk rewards and getting into them. And as far as this overall sector is concerned, the pharma index is in a structural up move, and unless and until the market comes out of this overall broad trading range, we feel that pharma is here to stay. So we very well remain positive on that space, and Sun Pharma could be looked upon for trading from the current market perspective.
Very quickly, Rahul, before we let you go, the underperformers of the day have been the transformer names, the GE Vernovas, Hitachi Energy, CG Power, all of them taking a big knock today. They run up equally significantly as well. Is this just profit booking from higher levels, or is this the start of a structural breakdown on the charts for them?
Yeah, looking at the way the price and volume action have played out, it seems more like a profit booking kind of a move. And as you likely said, they had their party on the way up. So some bit of pullback only makes the overall trend healthier and stronger in the broader scheme of things. So once this profit booking period settles down, we are looking to re-entry opportunities into these setup, like for something like a GV TND, very robust chart on the long-term setups, whether it is monthly or weekly charts. It's a correction worth looking at. So let the correction play out for the next couple of days maybe, and post that once the stock stabilizes, we could look at re-entry opportunities at around key support levels.
Thank you very much for that. The mid-cap index will come up for you on your screen. It slipped to the day's low and flat now. It was up 0.5% at the day's high. It's given up all the gains as the session has progressed. Get into a break. We'll get you more on the markets.
We are over, Jimmy.
Hey,
लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो। After
Welcome back. Leverage in the Dalal Street is climbing. The MTF book has now crossed 1.35 lakh crore in the month of June. Hormus is joining in with the data. Hormus.
There's a very interesting data that has come in this time around for the MTF book for the month of June. Not the fact that it has still continued to grow, the fact that it is still at record high levels, 1.35 lakh crore now at the end of June. So it was a 7% month-on-month change that we saw for the MTF book. And if you take a look at the stocks as well, the top traded stocks on the MTF book, there have been some changes, and Reliance Industries has now moved right at the top as the most levered stock on the MTF book. So 41% month-on-month growth. There's a similar growth that came out in the last month as well. But the actual move has been seen on Infosys. The moves that you saw on the stock in December, the MTF positioning has gone up and it has crossed 2,000 crore rupees now, a 56% month-on-month move that the stock saw in the month of June on the MTF book. The unwinding has been seen in HDFC Bank. At the end of the May month, the stock was the top traded one on the MTF book. That has seen a 20% correction on that positioning, and it has now gone sub 1800. At one point was almost 2400 as well. So that's a 20% drop on HDFC Bank. And similar to Infosys, TCS too has seen a 23% jump in its MTF positioning for the month of June. But now take a look at the stocks that have seen the biggest increase. These were the top 5 on the MTF book. Now these are the ones that you see that are the biggest increase. Persistent Systems, again, in fact the last month Persistent Systems was among the top names that had seen a reduction in its positions. This time around, from 220 crore the number has moved to around 550 crore on the MTF book. Is a 146% up move that you have seen on Persistent. Vedanta, of course, the second full month after its demerger, that has also almost doubled on the MTF book, is around in a 90% up move in the month of June. BSC has seen a 70% move, and the two Tata Group names, Tata Steel has done well, and Tata Motors Passenger Vehicles, which has been fairly volatile in terms of price action, but on the MTF book, both of them have grown anywhere between 60 to 70%. But the interesting bit is the fact that where there has been unwinding that has been taking place. Before that, look at the silver ETF. That has made a bit of a comeback as well. At one point at the start of the year, the silver ETF was possibly the most levered on the MTF book, but ever since the prices cooled off, the leveraged positioning also came down. There was liquidation there, but in the month of June, there has been a 30% up move that you have seen on on the silver ETF. The Nippon AMC silver ETF is what I'm talking about. From close to 700 crore, it's now 900 crore plus at the end of last month. Now come to the unwinding bit. All 5 names of the top 5 unwinding are Nifty names. We spoke about HDFC Bank, but take a look at the others as well. SBI was among the top 5 in the last month. It has slipped out of the top 5 this time. There's a 43% down move that you have seen in the MTF positions. A similar story playing out for Indigo and for Shriram Finance as well. Of course, the sums there are not significant, but trend too, as the stock saw a bit of a recovery from lower levels in the month of June, but the MTF positioning came down around 37%, and Bajaj Finance too. The stock doing well today, but the MTF positioning has seen some liquidation, and from around about 450 crore, it's now down around 300 crore, sub 300 crore for Bajaj Finance. So interesting trends. The MTF book continues to grow, but the Nifty names are the ones that have seen some significant liquidation, HDFC Bank included.
Thank you very much for that interesting data. Let's talk about one more stock, and that's Avenue Supermarts. And this is not an account of the MTF related news, but the weak business update that they've given for the first quarter. Stock is under pressure. Mangalam joins in with the numbers and what's disappointed the street.
Well, it's a soft first quarter update that has come in for Avenue Supermarts. It's a 15% revenue growth that the company has reported in the first quarter, much below what the street was anticipating this time around. The important parameters that we're looking at, along with just the revenue growth, is also store additions. Last quarter was a fairly strong one, not so much for the first quarter, where they added just about 3 stores. And if you look at it year on year, the store addition has actually been 18.5%, which implies that perhaps the same store sales growth for D-Mart this time would have been negative, if not flattish. So that is something that we will most definitely track in the street, not liking that. Brokerages too have cut their estimates, and that explains why the stock is lower. A lot of the revenue weakness can also be explained by destocking of the pantry stocking that took place in the fourth quarter, and perhaps realizations lower on account of the GST cuts that came by too. But still, it is a lot lower than what the street expectations were, and along with that, even lower than what we've seen for other value retailers report.
Avenue Supermarts among the casualties of the day. Mangalam, thank you for that update there. But auto sales numbers had come in the first 2 days of the month, and Bajaj Auto reported a healthy number as well. Earlier today, we spoke to its joint managing director, Rakesh Sharma, and he said that the trend for the electric vehicles remains strong. Now, on the Delhi electric vehicle policy, he said that allowing hybrid products would have made the Delhi EV policy more balanced. Listen into what he had to say.
It's definitely a very bold move, particularly because it is very handsomely supported by subsidy and scrappage incentives, etc., which will be persuasive for the customer. But having said that, Delhi is a very large city with vast distances. And in such a market, that what happens is that there is a lot of different types of use cases. A singular approach, which is entirely based on only electric, may not serve the purpose of all types of customer segments. We must use the array of options which are available to us and have a solution drawn from that. But banning everything else in preference to just one approach may not serve all the purposes in the longer term. It stacks up to between 2 to 4% of our all India sales. It's a very, very busy quarter for us in quarter 2 because there are many new launches lined up, and I think that will sparkle the business for us. We are taking all measures to progressively double our capacity, which is right now 50,000 units per month. We are looking over a period of time to double this capacity because we think that this segment is set to grow very fast.
Bajaj Auto there on the auto sales and of course on the Delhi EV policy as well. Take a short break. Back with more on the other side. Stay tuned. Welcome back. The markets continue to remain where they are, and that's something that the bulls would be happy with. They'd want to end the week on a high. This is going to be the 4th straight weekly advance for the index. So that's the positive. And a very interesting note that has come in on what else but the hot topic, that is AI, and that is from Nuvama. And Rima will tell us more on that.
Well, indeed. So, Nuvama believes that the AI mania is now exhibiting clear signs of excess. There is a melt-up of hardware stocks, high valuation, retail euphoria, and IPO boom. They acknowledge that this time, the frenzy is backed by strong cash flows. Unlike in the dot-com era, Nuvama says it is not shock-proof, and shareholders are likely to dissent. Which they're saying is already visible, and the shareholder dissent will force hyperscalers to reassess their capex plan. And I think that is an interesting trend to watch, because up until now, shareholders would, or investors would, reward the AI companies for their capex plans. Every time if the capex plan was not increased, there was a stock disappointment. But now if that trend continues and shareholders start weighing in, we will have to watch that place. And they're saying that this comes at a time when Fed is also increasingly focused on price stability. I remember one expert saying that what we are facing is commodity deflation and AI inflation. The fading AI mania, Nuvama goes on to say, and rising demand risks a warrant decisive defensive shift, especially when cyclicals are one standard deviation expensive and defensives, whether it's private banks, IT, are on the cheaper side. So the Nuvama strategy is now tilting towards defensives, in that it includes cement, focus on profitability, chemicals, because there's a forex tailwind. Pharma is a defensive, and they are underweight on auto cyclicals given the demand risks ahead. So they do expect perhaps the AI bubble or the mania to cool down, but their tilt is towards defensives.
Cooling down. It is cooling down actually with all the semiconductor stocks and the way they are selling off. Recently on Wall Street, all the AMDs and the Microns, all of them over the last.
And for the last 2 days, the software companies have made a comeback.
Software companies are doing well. Yeah, that's their time in the sun. It's like, oh, we are still around. Don't forget us. But with markets navigating global uncertainty and an uncertain growth outlook, Axis Mutual Fund Shreyas Devalkar shared his views on sectors that he likes, the margin pressures due to input costs, and the road ahead for India's economy.
One view we are also taking that it is also we have to look at 2-3 quarters ahead, because already these commodities have started falling and you are sitting on a price increase. So how much impact it will have on the margins 2 quarters down the line. So this quarter margin may be washed out for someone because of the raw material impact. So this holistic picture we are taking, and when you are talking about FMCG, I'm just